And today we had a large gap down, and a big gap always increases the chances of a trend day up or down. A big gap down favors a trend day down. First bar being a bull bar favors a trend up. But since we're back within the magnet of yesterday, the trading range of yesterday, we may go sideways in here for a little bit. Two-bar reversal and a sell, except that we're just above yesterday's low, and that might hold, so I wouldn't short that. Also, the first bar of today is reasonably strong, so that works against the short. The tail on the bottom of 2 works against the short, and then we're within the trading range of yesterday, and that is a problem for the short as well. This is an example of an outside up that I think is an acceptable buy, because bar 1, the high of bar 1, is an acceptable buy, and so we're going above that acceptable signal bar, and bar 2 trapped shorts in. So with both of those things, I think this is okay to buy above the high of bar 1. Outside up, it's basically outside, 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 2 outside bars, even though 2 is the identical range of 1. I think buying above 3 is okay as well. It's a large bar. Bad entry bar, the doji, big tails. At this point, I think it's a tough call on where to put the stop. I think you still have to have the stop below 3. So since you're risking a lot, presumably you're trading about half size. 5, I think, is a breakout mode bar. If the market goes below it, it could be a low too short and lead to a breakout below yesterday's low. And if it goes above, the trend from the open bull could work. The bulls need a breakout, and 6 looks like a breakout bar. 7 is not good. If you're having a breakout, you want follow through. You don't want to pause on the next bar. However, 1, 3, and 6 are strong bull bodies. It's 3 pushes up, so yes, it's a wedge bear flag, but it's such a steep channel that I think there'll be buyers below 7. So I would look to buy down there. I wouldn't short there. 2-bar reversal at 9, still always in long. Well, maybe always in long from 6, but it's trend from the first bar or trend from the open based on 3. But I have problems, with it. 2 is a bear bar, 3 didn't close on its high, 4 was a bad entry bar, 5 is a bad follow through, 7 was a bad bar for the bulls. So this is not behaving well for the bulls. Small entry bar, another breakout attempt at 11. So this could be good for the bulls, but that's a relatively large bar, so it's possible that it will behave as an exhaustive climax, and the market may need to correct sideways before going higher. It could also lead to a reversal down. At this minute, I think the market is always in long. Some traders will say that it went long on 6. Others will say it went long on 11. I always want to see follow through, so I want to see what the bar after 11 looks like. And that is not a strong bar. However, at this minute, my assumption is this 4-bar spike put the market always in long, and the catastrophic stop is below the bottom of the spike, so below bar 9. So if you're risking 6 or 7 points and you're entering at the market, you've got to trade small. Arguably some kind of a wedge pullback here, parabolic spike and climax, the 3-4 spike or the 6-7 spike, and then the climactic move up 9 through 12, a little bit parabolic. The market could correct down to the bottom of the channel, the bar 8 area. I personally would not short that, and I thought this was a good situation here. The bar 14 bull inside bar, I thought it was a bad buy setup, so I thought there would be sellers above, so I placed a limit order to short at the 14 high, and I did not get filled. That's always a sign when everyone is looking to short the lower high. A lot of times you don't get the lower high. The market just goes down. Here's the test of the bar 8 low, a big tail at 17. To me, always in is still long. This did, even though the market's down for 5 or 6 bars here, it's still not strong enough for me to think that the market is always in down. 2-bar reversal at 17, bear channel. We had a spike up from bar 9, spike down to 17. I think the odds are very high that we're going sideways in here. So I think it's okay to short above this 2-bar reversal. Okay, decent looking entry bar on 19 for the longs, but to me I think the market is going to go sideways. Big up, big down, should go sideways for at least 10 bars and at least 2 legs. 2-bar reversal, short setup at 20. There are 7 ticks to the 17 low, so there is room down there, but I don't think it's a great short. I think always in is still long, and I'd rather look to buy a good-looking high 2 if we get one. 22 is setting up the high 2, but it's not a good-looking high 2. It's got the tail on top, the small body, and I would have preferred it to test lower. I wanted it to be a double bottom, maybe with 17. So to me, I'm waiting. Okay, we're in a tight trading range here. There's a low 2 short at 24. I'm not taking it. I think always in is still long. This is barbed wire. There should be buyers below. Now we've got a triangle, 3 pushes down, double bottom pullback with 17, 22 double bottom, or you can say double bottom bull flag with 22, 26. So the market could go up here, but I'm concerned that we've basically had one little breakout bar on 6, and then since then we've been pretty much sideways. Okay, the market broke out on 27, and it had 2 decent bull bars, 26, 27. So it should try to form a breakout pullback, and 28 is a bad-looking bar for a short, so I think there'll be buyers below. I think it's okay to buy below. 29 is not a good-looking signal bar for a long, so if you did not buy below 28 or at the 28 low, then you could buy here. But if you did buy, this is not a setup where I'd like to trade heavily, so I did not add on here. Another attempt at a breakout at 30 with the big tail on top. Trading range for a couple hours now, or an hour and a half now. I think that the market looks like it's working up to the 86.25 area, which is the open of the month. The bulls want the month to have an up close on the month, so they want to close it above 86.25. The bears want the opposite. We're on always in long for the moment, even though we're in a trading range. If I have to choose between buy signals and sell signals, I'd rather take buy signals. A little wedge with 23, 27, and 30, but the signal bar is a doji, which is not good. I wouldn't short below it, but we're so high up in the trading range that I also would not buy below it. Also, I wouldn't buy because 30 is not all that strong, and 31 is not strong either. The second entry short at 33. We're basically in a pretty tight trading range, and we're always in long, so I'm not going to short that. An attempt at a high 2 long at 35. To me, this is too confusing, and I don't want to be buying this close to the top of the trading range. We could be starting to form a bull channel after the spike up from 9, but if we are, it's a very shallow channel. A failed low 2 at 37. I'm not shorting. Tight trading range. We're pretty much in the middle of the range. Wedge bull flag at 38 with 34 and 32. Doji signal bar, not ideal. Decent entry bar with 39. Market tried to set up a breakout pullback long with 40, but it didn't trade below 40, so that's good for the bulls. And then the market broke to the upside on 43. It's a big enough bar so that the market is probably always in long. There's the obvious target just above it, 86.25. The market should get there. It looks like that's where it's going. We had the II at 45. You always have to wonder, why did the market not have an immediate follow-through bar after 43 if 43 was so good and we had the magnet above? So this is not behaving well. The bulls have had several breakouts today. 3 and 6 and 11 and 30, and now again 43, but each time it failed to have follow-through, and that's a problem, because that's not how bull trends behave. That's how trading ranges behave. So this is an okay long. There's room to 86.25, but it could become a 2-bar final flag.